Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's Friday, the 10th of February, and we have with us James Whelan. He's the investment manager, head of the VFS Group Global Macro Fund, and he's coming out of Sydney. James, it's always great to have you on the show. It's Friday afternoon, 4 p.m. for you, isn't it?
Yeah, it's the end of an extraordinary week, Brian. My words are going to spill out of my head, or they may not come at all at this particular stage. It's been a heck of a thing. I feel like I've talked through 1,000 stories, mate. How are you? You well?
Good, thank you. Now, James, before we get your insights, I'm going to take a look and see how markets have performed across the region. And we're going to start with cryptocurrencies. Bitcoin is at 21,815. It's down 3.33%. Ethereum is at 1,542. It's down 5.04%. Now, looking across the regional equities markets, we've got the SGX, which is down 0.28%. We've got Bursa Malaysia, which is up 0.46%. Shanghai is down 0.62%. The ASX All Ordinaries is down 0.86%. The Nikkei is up 0.18%. The Hang Seng is down 1.93%, 96% now. And rounding up the numbers, we've got the Kospi, which is down 0.58%. Now, James, what's your view on market performance in the first half of the day in the region?
It seems like a lot of weaknesses coming out of the space, Brian. Mainly led by everything at the moment. It seems like there's a few things. Where do you want to start? First off, we're catching the tailwind of the US, where it seems like inflation might be a bit higher. We're factoring in some tighter, more hawkish potential rate increases from the US and the Fed. Maybe they've got a bit more to go here locally. We've had a complete swing around in the market where we were all thinking that the Reserve Bank was going to go from one interest rate rise and that's it, 25 basis point rise on Tuesday. The commentary along with that rate rise that we did have, that everyone was expecting on Tuesday, was that maybe there's going to be some more to be done. That sort of sent the market a little bit spinning. We've had consumer price index out of China coming in just slightly lower than where expectations were. People are thinking maybe not as amazing, that story that there. And maybe everyone's just sort of thinking that, we've had a really good January. Maybe it's just time for a bit of a breather, figure out what's going on with rates. Central banks run the world, and that's sort of where we are. So that's the story that we've got. Everyone's just taking a bit of a breather and maybe just having a little bit of a calm Friday and figuring out what's going to happen over the weekend and next week.
Everyone's had a great opening run at the start of the year, James, but the key thing now is, where do you see the risks in the market?
As just mentioned, now if you play the tape to the end, Brian, that if you sort of just spin, okay, let's take a step back. COVID brought stimulus. Stimulus brought inflation. Inflation has brought interest rate rises. Interest rate rises now bring what? And this is the strain that a lot of people are starting to see. Ex-China and ex a lot of Asia, we're starting to see that the strain is coming in for people who have got mortgages. The spending that they've got has to go towards their higher mortgage contributions. Australia, locally, we've got this huge cliff of people who are on a fixed rate rolling into a variable rate mortgage. That number then all of a sudden goes through the roof. They need to outlay to be able to pay for their house, to keep keep a roof over their head. The biggest opportunity currently in markets is absolutely going to be in getting out or shorting consumer discretionary. I think that there's locally here in Australia, I think that's probably the best play that there is. That's the opportunity that we see that could be here. I think that spending when it comes to on discretionary items has got to be coming off. If you're going to be choosing between going and getting a new couch and paying the mortgage, you're going to be picking the mortgage every single time. Similar in the States as well. I know that I'd like to keep it close to Asia here, but similar to the States, I think that that's the best trade that we've got ahead of us now. Regarding that, I think that anytime you get a chance to buy copper on the continued Chinese reopening trade, you probably want to get some on big dips that you can buy copper. But that's a general overarching trade that I've got there. But the other one, Brian, you want to play it easy? You want to keep it easy? Bonds. Just buy bonds at the moment, looking at where they are. Those interest rates are really poppy, really punchy, and I think that there's a lot of money that's going to flow into the bond market there. I hate to be boring and I hate to be safe. I know that I know that people don't often like that, but I think that making sure that you've got a really good, healthy bond position in your portfolio is not such a bad idea with where rates are right now and the amount of money that's got to flow into the bond market over the next month or two.
James, a lot of traders are also seeing opportunities to do some China related trades.
Mm.
What should we be doing in that space?
I think that the idea that China is moving towards being that consumer market, that won't stop. Now, yes, the population is shrinking long term. That's okay. However, the reopening trade is going on. I saw some numbers come out talking about Beijing Metro. Now, this is the sort of thing that you really want to get down to the granular detail. The Beijing Metro passenger numbers, I saw some numbers on that overnight. 1 million people. Now, that's the highest in a year. 1 million people using the metro in Beijing in one day. That's the highest in a year, like I said. And that is showing that there's a real return to business and activity and everything that you'd like to have, that global growth engine in China. So continuing that idea of people spending money, people doing things, people out and about in China, any way that you can get exposure to that, probably going to be not such a bad idea that's there either. Also looking at the fact that, anecdotally, traffic jams in Beijing. That's a really interesting story as well. Not something that's really been talked about or seen. Didn't even exist over the last couple of years, but there's a play there. China is reopening, Brian. There's no way to get around that. There's no way to deny it. You can't deny that it's going to be happening. You've got 1 million people who are using the Beijing metro in a day. That can't be ignored. People are back at it in China, and they're going to be heading in the direction that the presidency wants them to head, and that is to be a consuming society. And any way that you can get leverage to that, I'd probably suggest that you do so.
James, as always, thanks for coming on the show on a Friday afternoon for you, late afternoon. Thanks for your insights.
No problem at all, mate. Have yourself a great weekend, and I'll talk to you next time.
Now, I'm Brian Fernandez, and we've been speaking to James Whelan, investment manager and head of the VFS Group Global Macro Fund, on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.